During a period of ongoing share market volatility, challenging and uncertain macroeconomic conditions, and significant geopolitical announcements and actual events, Argo's profit for the financial year ended 30 June 2025 increased to $259.8 million. Investment revenue from companies in our portfolio also rose, up 5.1% to $285.8 million, bolstered by better than expected dividends from numerous holdings and several higher special dividends received during the year. In August, the board was pleased to declare a fully franked final dividend of 20 cents per share, an increase of 2 cents or 11.1% on last year. Together with the increased interim dividend of 17 cents per share, the total fully franked dividends for the year were a record high of 37 cents per share. Despite increasing the level of fully franked dividends paid to shareholders over recent years, the balance of Argo's accumulated franking credits has continued to increase. Recognising that imputation credits are more valuable in our shareholders' hands than on our balance sheet, and given the continued growth in Argo's franking account, the board considers it appropriate to meaningfully increase the final dividend. Argo remains committed to sustainably growing fully franked dividends and for the foreseeable future accelerating the distribution of those accumulated franking credits. The final dividend also included a listed investment company capital gain component of 7 cents per share, due to capital gains being crystallised, including those resulting from takeovers. When Argo realises a discounted capital gain, the associated tax benefit can be passed on to our shareholders as though these shareholders had made the gain themselves. This enables most individuals and self-managed superannuation fund shareholders to claim a tax deduction in relation to this gain, in addition to the benefit of franking credits. Importantly, Argo is one of the few companies able to offer this benefit due to our status as a genuine long-term investor rather than a short-term trader. This is an important benefit of Argo and differentiates us from managed investment funds, exchange-traded funds, and many other LICs. Shareholders can find more details on their dividend statement or by visiting the dividends section of the Shareholder Centre on our website. Over the 12 months to 30 September 2025, Argo's investment performance as measured by net tangible assets return after all costs and adjusted for the corporate tax we pay was 10.3%. This compares to the S&P ASX 200 accumulation index, which gained 10.6%, although the index makes no allowance for any operating costs. Over the past 5 financial years since the onset of the COVID-19 crisis, a period marked by significant global disruption and volatility, Argo has delivered a compound annual return of 12.1%, outperforming the index, which returned 11.8% per annum. We believe Argo's ability to navigate these tumultuous times and generate consistent competitive income and returns reflects the strength of our diversified portfolio and disciplined long-term investment approach, which focuses on businesses that are able to maintain and grow their dividends. As shareholders will be aware, Argo's share price has been trading at a discount to its NTA for some time. This is consistent with an industry-wide trend, with most listed investment companies offering exposure to Australian equities, also trading below their underlying asset values. We have taken proactive steps to help reduce this discount, including selective use of on-market share buybacks and purchasing shares for the Dividend Reinvestment Plan, the DRP, and the Dividend Substitution Share Plan, the DSSP, on market rather than issuing new shares at a discount to NTA. However, we believe the current discount is primarily cyclical and reflects the greater relative appeal of cash investments currently. During the COVID period, ultra-low interest rates made cash returns negligible, driving demand for LICs like Argo. Our share price climbed and traded at a premium to NTA, peaking at a 10.9% level as the Reserve Bank of Australia began raising interest rates in 2022. Cash yields became competitive again, and this put downward pressure on Argo's share price as many investors, particularly retirees, shifted capital to term deposits and other cash or income products. Looking ahead, as the monetary easing cycle progresses and returns on cash decline, we expect renewed investor demand for Argo's reliable, fully franked income stream. This should help narrow the discount, particularly as the dividend yield of the broader market continues to trend lower, while Argo remains focused on sustainably growing its fully franked dividend. Furthermore, as retail investors lose access to bank hybrid securities over time, we suspect that those income-seeking investors will also be attracted to invest in Argo shares. Over the long term, Argo shares have generally traded close to the NTA value. Over the past 10 years, the average discount has been just 0.7%, and over the last 30 years, only 0.4%. Given this mean reversion over time, many long-term shareholders see these periods of discount as attractive opportunities to accumulate shares below the value of Argo's underlying portfolio. Argo's succession plan for the Board of Directors is designed to provide orderly renewal while ensuring an appropriate mix of skills, experience and diversity is maintained. As announced at last year's AGM, the Chairman, Mr. Russell Higgins AO, announced his decision to retire effective 31 December after 13 years as a non-executive director, including 7 as chairman. The board would like to record its thanks and appreciation to Russell for his long period of service and commitment to the company and the leadership he provided. Mr. Chris Cuff AO retires from the company at the conclusion of today's meeting after serving on the board for 9 years, including as a member of the Audit and Risk Committee. Chris has made a significant contribution to Argo over this time with his deep industry insight, funds management experience and diligence. On behalf of the board, I would like to thank Chris for his outstanding service to Argo. Mr. Simon Parish was appointed as I think that's appropriate. Mr. Simon Parish was announced as an independent non-executive director with effect from 3 October 2025 and stands for election before you today with the unanimous support of the board. Simon brings an extensive experience in the funds management industry, having worked with Russell Investment Management for over 30 years across a variety of leadership and investment roles in varying market conditions. I'm pleased to formally introduce Simon to shareholders today, and you will hear from himself later in the meeting. Australian and global markets continue to be shaped largely by geopolitical and macroeconomic forces, most notably the policy and posturing of the United States under President Trump. Aside from a period of volatility around US tariff announcements and related uncertainty, investors have largely remained willing to look through the range of risks as facing the market. Much of the prevailing optimism has been driven by the remarkable levels of investment in artificial intelligence or AI-powered technologies and wide-ranging potential applications. Looking ahead, AI technology is poised to continue shaping our lives, the economy, markets and society in profound ways, both positive and negative. Despite the market's optimism, the pace of change driven by technology development is alarming at times and not without risk. We wish to reassure shareholders that Argo's experienced board and management team regularly consider and challenge our established processes and investment philosophy to ensure that they continue to be relevant and optimised to meet rapidly changing circumstances. I remind shareholders that Argo has demonstrated resilience through many different market conditions, disruptive events and technology developments over nearly 80 years of investing. With a strong balance sheet, no debt and a diversified portfolio, Argo remains resilient to this environment. In closing, I would like to thank our Managing Director, Jason Beddow, and the entire Argo team for their hard work and dedication throughout the year. I also thank my fellow directors for their valuable contributions, and in particular, Chris Cuff for his commitment and service to Argo over many years. Finally, on behalf of the board, I sincerely thank our loyal shareholders for their ongoing support and extend a warm welcome to our new shareholders who have joined Argo in this last year.